All right, so we've been talking about financial management function and environment. We've looked at the nature and purpose of financial management. We've explained the relationship between financial management and each of financial accounting and management accounting. And also, we've identified and described various financial objectives, which we talked about the stakeholders' value, shareholders' wealth maximization, profit maximization, earnings per share growth, and the rest of it. And so also we talked about corporate objectives and the influence of stakeholders. We talked about stakeholders last week. We discussed the key stakeholders of an organization and their various interests. We also looked at possible conflict between stakeholders, and we talked about how we can evaluate management roles in managing stakeholders. And we talked about agency theory. And also we look at various methods of achieving stakeholders' objectives, the regulatory requirements, corporate governance code, the management reward schemes, ratio analysis, total shareholders return changes. Now there's a video I will place on my YouTube on total shareholders return changes. I'm just doing the editing. I did a simple explanation on total shareholders return changes that involve calculations. So I will share the video with us. So tonight we'll look at the third part of the syllabus. I will share the syllabus again on the platform. I will follow the syllabus sequentially, so we will not leave any stone unturned. So the third part is financial management in not-for-profit organizations. In not-for-profit organizations, there are various organizations that are not out to make profit. They are just out to provide essential services to the people, to the masses, without the motive of making profits. And then such organization are termed as not-for-profit organization. I'm using the word as the syllabus have put it, instead of saying non-government organization, or instead of saying NGO. So I'm using the word as it is being put in the syllabus, that financial management in not-for-profit organization. So now, looking at financial management in not-for-profit organization, the word not-for-profit has actually shown what they are out for. It shows they are not out to make profit. So it will look so childish for me to ask you what that organization is. So a not-for-profit making organization is an entity, established primarily to achieve social, charitable, educational, religious, or cultural objectives, rather than to earn profits. This is not in my slides, so you can put it down if you wish, but everybody should know that, yes, it is not good to assume. So not for profit making organization in financial management, these are organizations that are established primarily to achieve social, charitable, educational, religious, or cultural objectives, rather than to earn profit. So unlike profit making businesses, the goal of a non-profit making organization is not to generate income for owners or shareholders, but to deliver services and fulfill a mission. That is the goal of not-for-profit making organization. Somebody might say, why are they bringing this in the topic as part of the syllabus? It's very simple. Yet it might look very simple, but they can actually bring questions in case study form to test your understanding or on what you seems simple Yes. So every part of the syllabus, you must be well grounded in it so that when question is being served to you in form of case study, you'll be able to answer as appropriate. Now, the key features of non-for-profit making organization is that they are purpose driven. The main aim is to serve the public or a specific group rather than to maximize profit. Now, you have some charitable organizations, they are out to look out for children, some are out to look out for the aged ones. Yes, some are out to look out for maybe orphans. Yes. So there is a purpose in which most of these organizations are set up, and their main goal is not to exploit consumers, to exploit the beneficiaries of those services, but to make sure that the beneficiaries are comfortable and fine. Yes. So also, when it comes to non-profit making organization, we don't talk about profit, but we can have surplus. Yes, maybe from donors, organizations that donate money to individuals that donate money to a fund to sponsor that particular purpose in which the non-for-profit organization was set up. So they are not out to make profit. Once they have surplus, they reinvest. They reinvest to achieve the purpose in which they've been established. And also, one thing we must note about non-for-profit organization is that there is no ownership interest. There is no ego that I'm the owner of this. My own mission, my own aim, my own interest must be fulfilled first. No, there are no shareholders control. So it's usually in the hands of trustees, yes, or governing board. That is one thing with non-for-profit making organization. And their source of income is usually mainly from donations, maybe grants, and it can be subscriptions. We have some some organizations, some old boys in certain schools that will come up to put resources together to finance a charitable home, to finance orphanage. Yes. So their source of funding can be from individuals, donations, grants, subscriptions, sometimes from service fees and the rest of it. So these are some of the key features of not-for-profit making organization. So based on the slide, I put that the primary objective of not-for-profit organization is to make money, but to benefit, not to make money, but to benefit prescribed groups of people. Yes, to benefit prescribed groups of people. As with any organization, non-for-profit making organization use mixture of financial and non-financial objectives. Yes, but however, with the not-for-profit organizations, the non-financial objectives are often more important and more complex. Yes, because they are not out to make profit. They don't actually measure their achievements using financial metrics because their aim might be to provide welfare services. But there is one key thing, even as the donors give in their money, they want to see accountability on one hand. Yes, if you've worked with NGO or you have friends that work with NGO, for every activity the NGO is carrying out, there is a budget for it, and there must be a report to back up every activity so that those supporting that aim, that mission, that goal, we see that yes, this is true, that you're actually using our resource well as expected. So the fact that their main aim is not to make profit, still, there is still need for them to be accountable and to do the right thing. So most key objectives are very difficult to quantify in not-for-profit organization, especially in financial terms, because quality of caregiving to patients in a hospital cannot actually be evaluated using ratios, using financial metrics. Yes, you cannot actually quantify it in terms of money. Yes, so multiple and conflicting objectives are more common in non-financial or non-for-profit organizations, e.g., quality of patient care versus number of patients treated. So all these are ways that we measure performance in not-for-profit organization. How well can we give quality treatment to our patients? How many patients can we treat? Have we treated within the space of 2 months, 1 month? These are our metrics, our performance indicator, our KPI in terms of not for profit organization. So let's take note of this. Yes, the objectives of not-for-profit organization, that a number of factors influence the way in which management objectives are determined. So which them from commercial businesses. As far as this is concerned, they have wide range of stakeholders, individuals, people celebrating uh, the birthdays, a special day to them, and decide to visit some of these charitable homes and donate funds. Trustees, they have wide range of stakeholders, those that have interest in them. So that is one of the features of not-for-profit organization. And also there is high level of interest from stakeholders groups and significant degree of involvement from funding bodies and sponsors. So there is high level of involvement from those that give in their funds for the organization to keep running. They want to see how are you using our money for the purpose in which we are giving it. So these are some of the objectives of not-for-profit organization. So little or no financial input from the ultimate recipient of the services. Those benefiting from the service, most times they don't have anything to give in. They don't have anything to contribute in terms of finance. So they are only receiving. And the people giving the money are happy that they are using the money as expected. So funding often provided as a series of advances rather than as a lump sum. So people give in piecemeal, people give in advance, people give as they wish. Yes, so the money keep coming in different forms depending on the interest of those that will to key in into that mission. So projects typically have a longer term planning horizon. So it is not defined for a specific period of time, but it's usually carried out for a long period of time without a definite time for it to come to an end. So most of these non-for-profit organizations, there exists a perpetuity. Yes, so I may be subject to government influence or government macroeconomic policy. Yes, there are certain policies of the government that can affect these non-for-profit organizations. A very practical example is the case of Donald Trump. Yes, if you have people who work in NGO, most people are out of job currently because of certain policies that you said will no longer fund some of the health, will no longer give funds to some of the health aspects in which they are assisting in most of our countries, most especially in Nigeria. Yes, quite a number of colleagues, friends are out of job due to some of those policies put forth by the US president, and some of the funds that come to health sector, certain aspect of the health sector is no longer coming again. So some people that are faced with certain ailments, we have to pay huge amount of money to get certain drugs to actually ameliorate their 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 sickness or their ailments. Yes, let me put it that way. So they can actually be affected by government policies, and there's nothing anybody can do about it. Yes, anybody with NGO experience here, you want to share, you want to tell us more about this? Anybody? All right. So talking about financial management in non-for-profit organization, while profit is not the goal, sound financial management is crucial, yes, for sustainability and accountability. I mentioned that. So even though we are not out to make profit, we must be accountable to those that are giving the money. So there is need for budgeting. There is need for planning income and expenses to ensure that what the mission is driven as expected. And also there is need for financial control. When you talk about control, it entails monitoring how resources are being used to avoid misuse of funds and to ensure compliance with donor requirements. So there is need for us to see how well is the fund being utilized so that the aim of the donors will be achieved. And also there is need for reporting. Yes. So for transparency, there is need for preparation of financial statement to stakeholders. And what are these stakeholders? Donors, regulators, the public, and the rest of it. And there is need for asset management. There is need for prudent management of resources to ensure continued service delivery. So these are some of the features of NGO, non-for-profit making organization. So the key difference between non-for-profit organizations and profit-making organization, one is that not-for-profit organization, they are out to provide social or service-oriented service. They are out to provide social service, while profit-making organization, their objective is to maximize profit. The objective is to maximize profit. And more so, in not-for-profit organization, any surplus is used or reinvested in the mission. While for profit-making organization, any surplus is distributed as what? As profit. Is distributed as dividend to shareholders because there is need for us to maximize the shareholders' wealth in profit-making organizations. And the source of funding for the not-for-profit organization is usually from donations, grants, and subscriptions, most likely. And in profit-making organizations, their source of fund can be through debt or equity and sales of goods and services. In the last class, we talked about capital structure, cost of capital, or capital structure. And capital structure in profit-making organization can be made up of equity and debt. You borrow to finance your business. You can decide to call for people to invest their fund by buying shares in the organization, and that is equity. You can use those two means to finance your business. And the financial reporting is very important in both organizations. Accountability and stewardship is key, and there's need to show profitability and performance in both organizations. Yes, there is what we call value for money. Value for money. And I believe every one of us, the fact that you're a rational consumer, you always work with this concept, value for money. You won't want to give out your 1 naira without getting value for what you want. Yeah, so based on the concept of cost benefit analysis, you shouldn't give out your resources for what will not, for a benefit that will not be worth more than that money. That is cost benefit analysis. So value for money is a concept in audit. Yes, I recall, it's a concept in audit whereby you look at three E's. Three E's. Where you look at effectiveness, efficiency, and what? And economy. Yes, value for money is a concept where we refer to the optimal use of resources to achieve the best possible outcomes. Yes, as you're giving out your resources, you are giving out your time. You want to actually use your time to get the best outcome, not to waste your time, not to waste your money. So as you're giving out your money, you want to give out your money to get the best service that you require. So value for money refers to, let me show this slide. Value for money. That's value for money refers to the optimal use of resources to achieve the best possible outcomes. So in financial management, it means getting the best results at the lowest cost without compromising on quality. Yes, you get the best results at the lowest cost without compromising, without any dilution on the quality that is being expected. So that is value for money, the value for money. So based on the slide, I put that value for money can be defined as achieving the desired level and quality of service at the most economical cost. At the most economical cost means at the cheapest rate. At the cheapest rate. So because a significant number of non-for-profit making organizations are funded from public purse. They are funded from public purse. So the lack of clear financial performance measure has been seen as a particular problem. So because we don't measure return on investment, we don't calculate return on equity in non-for-profit making organizations. So there is need for us to see that we use every resource as expected. Because certain persons, the fact that you are not out to make profits, people can waste your resources because you will not ask them to declare the profit or dividend. So because I'm a worker in an NGO and you decide to donate certain sum of money, some persons can decide to use that money for their own personal gain and not use it to achieve the aim that the non-governmental organization have been set up to achieve. So this concept of value for money is a key concept that is present in non-profit making organization. So it is argued that the public are entitled to reassurance that their money is being properly spent. Yes. So in addition, the complex means of objective with no absolute priority has also led to concern that money may be directed towards wrong ends. Yes, that is very clear. Yes, especially in a country where people are not sincere. Yes, and you donate your fund, they can divert it to another thing. Yes, to achieve their own personal gain. So these issues, along with a growth in the perceived need for greater accountability among the public officials, led to the development of the concept of evaluating value for money in public sector organizations. So the principles developed are now widely applied in most non-profit making organizations. So the key principles of value for money, we have the three E's. We have three E's. We have economy, we have efficiency, and we have effectiveness. Economy, we have efficiency, we have effectiveness. The three E's. Now, when we talk about economy has to do with input measure. Now, you need to calculate what you're giving in. The input, the money you want to spend is an input. Is an input. So economy is seen as an input. Effectiveness is seen as an output, while efficiency is seen as the balance between economy and effectiveness. So efficiency is the balance between economy and effectiveness. Let's see something here. So talking about system analysis, I put that a more detailed analysis of what is meant by value for money can be achieved by viewing the organization as a system setup to achieve its objective by means of processing inputs into outputs. So the organization system, the organization as a system, the organization, in the organization, we have inputs. The input can be in form of what? Materials, staff, cash. Now, the processes can be interaction of people, the structure, the information, and tax requirements. So when you give your inputs, it should process to give you a better output. So the outputs can be in form of goods and services. And the result of these outputs will lead to outcomes. The outcome, how do you measure outcome? You measure outcome by comparing your outputs with your standard, with your budget. Now, you've made a budget that this is what you want to achieve. Now, the output is what? So when you compare your output with your budget, you get your outcome. So have you met your plan objective? That is a measure of the outcome. So in simple terms, economy in the three E's of value for money, economy can be seen as procuring inputs, that is resources, of the right quality at the lowest cost. That is buying office supplies now at the best price without sacrificing quality. Yes, you are buying it at the best price without foregoing the quality. You are not looking at the fact that this thing is cheap, but is not, it won't stand the test of time. No, you're trying to get the best quality, but even at the cheapest rates. Yes. So also talking about efficiency, efficiency is using your resources in a way that maximizes output. You are using your time judiciously to get the best out of it. That is efficiency. So, for example, producing more services or products using the same amount of inputs. Now, there is what we call learning curve in performance management. You know, the more you keep doing a thing, the less time you should use. The first time you solve a question on CVP, you can use 1 hour or 2 hours. But the next time you are solving that question, you should use 45 minutes. The next time you should solve that question, you should use 30 minutes. So efficiency is you using your resources in a way that you maximize output. So you are using same resources that you've been using before to generate more output. That is what efficiency. While effectiveness is achieving the intended outcomes and objective. You've set a target and the target was met as planned. That is efficiency. That is, yes, that is efficiency. That is efficiency. So achieving the intended targets. I don't know if you are following.
That's how we are with you.
All right.
Yes, sir.
Yes, sir.
All right. Don't mind me. You know, some of us we like talking to figures. When it comes to talking and talking, yes. But I just have to do this. Being the first time we are treating financial management. If it is performance management, I will not talk about. I don't talk about theory. I don't like talking about theory. That is me. But being the first time, I want to make sure for the first time I touch every aspect of the syllabus, even if it is theory, even though it's what you can go and read. But I I want to actually talk about everything. Yes. Maybe subsequently in subsequent diets, I might not be talking about it again. I'll just go straight to calculation. All right. Kimi Godfrey, you want to say something?
Yes, sir. Good evening, sir.
Good evening,
Please,
ma.
I want to ask that you should please explain this 3 E's of VFM again.
All right.
Thank you, sir.
Let me go to where I have it in my slide so that I'll speak to my slide. Very fine. The three is now assessing whether the organization provides value for money involves looking at all functioning aspects of the organization. Performance measures have been developed to permit evaluation of each part separately. Now, talking about the three E's, we have economy, efficiency, and effectiveness. Now, economy, I put that it is procuring what inputs of the right quality at the lowest cost. That is economy. Somebody will say you are economizing. Yes, you're getting the right input, even at the right quality, at the lowest cost. Now, looking at the diagram on the screen, input entails material, staff, cash. Now, value for money focus on what? The cost and cost control. Yes, that is the aspect of the economy. You are trying to be rational, trying to get the best at the cheapest rate. That is the economy aspect of the three E of value for money. Value for money. So you don't just spend anyhow. You need to get value for every 1 naira you're giving out. And that is why some people will refer to economics as being stingy. It's not that they are stingy. Yes, if I want to give out my resources, at least there should be a value for the money I'm giving out. Yes, if I want to do charity, yes, I should know I'm doing charity service. So the fact that your uncle is not giving you money does not mean he's stingy. Maybe he has not seen a reason for him to give you money. And the fact that maybe you are also aspiring or you're an accountant and somebody is telling you are stingy. You understand? It's not that you're stingy, you're just trying to see that, okay, if I'm giving out this value of money, yes, what would be the benefit in return? But please, if you have money, help your people. I'm not talking in that respect. Yes, when you see somebody in need, yes, and you are led, please help the person. You know, all this money, we're not taking it to heaven. We just leave everything here. So it's the impact we made that matters. So economy is procuring inputs of the right quality at the lowest cost. So you can see from the diagram, value for money, the focus of economy is what? Your ability to determine the cost as appropriate and not inflate the cost at the detriment of the aim of an organization. Hope that is fine with economy.
Yes, sir.
Now, in terms of efficiency, efficiency, we said, has to do with your actions, the process of converting your inputs into meaningful form that will result into outputs. So we said efficiency is using your resources in a way that will not result into wastage of that resource, but that will result into the targets that have been set. You've arranged that if I'm to use 2 kg of material, by standard, I should produce a quality product. But by the time you use 2 kg and you're producing a substandard product, it means you've acted ultra virus. You've acted contrary to the standard, which will result into variance. So it means you've not used the resource well. So efficiency requires you to use your resource in a way that you maximize output. That is, you producing more service or product better off than the last time you produced. So based on what we have on the diagram, that the focus of value for money in relation to efficiency has to do with systems and methods. What system have we adopted? What method have we adopted to convert the input? Is the method efficient or inefficient? If it is efficient, it will reflect in the output. Yes, so that is efficiency. That is efficiency. If you are actually doing the right thing, using your resources well, using your time well, it will result in your output. So to every one of us, we are investing our time now. So by the time we are writing this exam and results should come, it should reflect in the outcome. Yes. Now, the value for your time now will now be what? Economy, efficiency, effectiveness. Now, the last one I will add will now be E. It will be G. It will be God. Yes, because you need God now. Yes, as far as the exam is concerned. But the value for your time, yes, let me speak now. In terms of economy, is in terms of what? Your cost. You trying to maximize your resources. You understand? To still make sure that you pass the exams. Yes. Trying to maximize your resources to still make sure you pass the exams. Now, when you maximize your resources in the best way, now the system, the method in which you put in your study should be efficient. You should study strategically. Yes. And know what to do per time. And this method should reflect in your outputs. Even before you step into the exam hall, it should reflect in what you do in your personal studies. That I'm improving. You should know that I'm improving. You know, if somebody can be reading and be deceiving him or herself, you are not understanding, but you are just claiming your understanding. Yes. So in this exam, everybody in this class, if you don't understand anything, don't pretend as if you understand. Yes. Open up. Open up. It is when you open up that you get assistance. You know, it is when you open up that you get assistance. So when you are doing the right thing, it will show in the process, in the output. And the output, when you compare it with your set standard, by now you should have set a standard for yourself. I'm writing 3 courses, and by the grace of God, I want to pass those 3 courses. So by the time you set your standard and the outputs now surface, when you compare the standard with your outcome, have you actually achieved your targets? When that is done, it means there is effectiveness. There is effectiveness. So effectiveness is achieving the intended outcomes or objectives. That is, for example, a training program will actually improve staff's performance. Yes. When you are being trained and you are still doing same thing, committing same error before you are trained, it means the training is not an effective one. There is no effectiveness in the training. So meeting plan objective is talking about effectiveness. When your plan is equal to your outcome, then there is effectiveness. But when your plan is different from your outcome in an adverse way, it means there is no effectiveness. So the 3 value for money points, the key principles of value for money: economy, efficiency, and effectiveness. So why do we have to consider the concept of value for money? I need somebody to talk now. Why do we have to consider the concept of value for money? Yes. Why does this matter? Somebody should talk.
For cost control.
All right. For cost control, good.
For
to avoid
accountability.
wasting wastage.
for proper management of resources that is donated or given as grants.
All right, fine, fine. Yes.
To avoid wastage.
Okay, fine. Good. To avoid wastage. Yes. So why value for money matters? All you've said, you're very correct. Let me add my voice to that. To ensure accountability in the use of public or donor funds. That is one of the reasons why it matters. Another is to help organizations make informed decisions about spending. You know, when you don't plan, when you go to the market, everything you see is what you buy. I know females, before they go to the market, they write their list. So once their eye is going to something that is not in their list, they quickly remove their eyes and don't get distracted. They follow their list strictly. You know, but me, if I go to the market now, even what I didn't plan for, I can easily buy because I I don't have a plan. Yes, I don't have a plan. I can decide that this is what I want to go and buy. But seeing something else catch my attention. I used to know females. I know my wife. She always writes a piece of paper. So that is planning. So value for money matters because it helps to promote transparency and good governance, and it encourages sustainable and cost-effective operations. So these are some of the reasons why the value for money matters. So yes, let's be moving like that. Okay. All right. So they are explained here. I explained them here. Economy that is minimizing cost of output. I don't want to dwell too much here because there is a question we need to solve. Now I put this that notes in red that use of the three E's as a performance measure and a way to assess value for money is a key issue for examination questions that relate to not-for-profit making organization or public sector organizations. So the use of 3E is very important. It's examinable. So let's when you see questions in form of theory and it's talking about this, quickly put your words together and see how you can answer them. So how do we measure the achievements? Measuring the achievements of objectives in non-for-profit making organizations. So since the services provided are limited, primarily by the funds available, key financial objectives for non-for-profit making organizations will be to raise as large sum as possible to raise money to any extent. That would be their financial objectives, and they spend funds as effectively as possible. These are their financial objectives. Financial objective, even though that is not the key, that is not the main aim. So targets may then be set for different aspects of each accounting period's finances, such as total to be raised in grants and voluntary income, maximum percentage of this total that fundraising expenses represent, amount to be spent on specified projects or in particular areas, maximum permitted administration costs, meeting budgets, break even in the long run, or breaking even in the long run. So the actual figures achieved can then be compared with these targets, and control action will need to be taken if necessary. That is, if they are spending much. The fact that yes, we are not out to make profit does not mean we should spend anyhow. There should be some measures for us to check how we are spending. For example, in an orphanage home where they have 100 children, they should know in a month how much they will spend in feeding those children in a month, how much they will spend on various consumables in that orphanage home. And there should be an estimate of what is expected to be raised, of what they expect to get as funding within a particular month to be able to cater for the need of the children. So these are ways of measuring the achievements of objective of non-financial or non-profit making organizations. That is, what is your plan? What is your outcome? You compare both. So if there is need for you to source for more aid, more grants from people, you see how to go about that. So there will always be a plan in conjunction with an outcome to be compared. Though their main aim is not to make profit, but to see that the reason for setting up that firm is achieved. Now, I just have this simple exercise, though this is not the major thing I want us to solve, but let's just look at it, that a subsidized college canteen services or service is to be evaluated by the local council to assess, among other things, whether it is financially sound and offers value for money, suggests appropriate measures of achievement that could be set for the service, that we should suggest appropriate measures of achievement that could be set for the service. So what are those? Can you just read the question on your own, meditate on it, and respond to it? Are we expecting us to say something about this? That a subsidized college canteen service is to be evaluated by the local council to assess, among other things, whether it is financially sound and offers value for money, suggests appropriate measures of achievement that could be set for the service. So anybody want to say something regarding this? Yes, let's say something. The exam have started. Though. Yes, can we talk?
Can you please share the screen question on WhatsApp, sir? I can't see the screen.
Wow, that's serious. Okay, let me download my slide on my mail so I can share with you. I'll send the slide to the WhatsApp now. Let me download it. But for those of us that can see it, what do you have to say? Let's talk. Just say something. You know, the exam starts here.
Okay, so
All right.
okay,
can hear you.
okay. Good evening, sir. I want to
Mm,
say like I jot down two things. I don't know if I'm correct. Let me just try. So the quality of food being served, to measure the quality of food being served, because you said we should suggest appropriate measure of achievement that can be set for the service. We have to set they have to set strategy for the quality of food to be served and the proper hygiene that is placed in the kitchen before the food is being prepared. I don't know, just
Okay. Yes, don't mind me. I'm trying to send this slide to the WhatsApp. So, yes, anybody else? Yes.
Since it's subsidized, since the canteen is said to be subsidized, it will check if the price that is given out to the students is actually um the right price, because it's a subsidy, and
Okay.
if the quality matches the price, not like matches the price like the subsidized price, if it, after subsidy they now reduce the quality of the price of the food, then it's no longer subsidized. So those are the things that they are meant to check also.
Right.
And also the quality of the service, the kind of quality that in the services they provide.
Okay. All right. Okay. Yes. So let me just say something that when you see some questions like this in the exam hall, anything that is coming to your mind, write it. Don't leave it as if I've never seen it before. Yes. Once you go to that hall, don't leave any question. So let's just quickly respond to this. Now, to respond to this, that a subsidized college canteen service is to be evaluated by the local council to assess, amongst other things, whether it is financially sound. Yes, you have to consider financial measures and offers value for money. Two things are there now. So financial measures, then you now look at what? The issue of value for money. So when you look at financial measures, you look at the proportion of the overall fund spent on administration costs. How much are we spending in administering the food? And also ability to stay within the budget and break even. How much have we planned to spend in getting the appropriate meal? Yes. Are we within our budget? Now, these are financial measures. These are financial measures. Yes, it's subsidized. The fact that it's subsidized, we should have a revenue target, how much we expect to earn, even though we are not out to make profit. But even as we subsidize, we should have a target, because it's from what we get, we use as working capital to keep running the business over and over again, even the fact that we're getting support to subsidize the meal. So these are things you can talk about under the financial measures. Now, they're not saying and offers value for money. So when you hear value for money, you should measure the three items under value for money. What are those things? The economic targets, the economy, the efficiency, effectiveness. So under the economy, what will you look at? Under the economy, yes, somebody should talk regarding to
The
economy.
inputs,
You said?
the inputs, the staff or the cash. That is
Okay.
Also
Okay.
to make sure that the money employed in buying in the resources are well sourced and is gotten at the barest minimum cost at good quality.
Yes. Yes. So the economic target, that is the cost of purchasing provisions of suitable nutritional quality. Yes, the cost. You must look at the cost of purchasing those provisions and the cost of negotiating for and purchasing equipment maybe required in the canteen. Yes, you have to negotiate for bulk discounts. Likewise, everything you can do to make sure you buy it at the cheapest rate, even with the best quality in mind. Negotiating of bulk discount, then the payment rate for staff of appropriate levels of qualification. Yes, those that work in the canteen, you just look at the scope. Certain questions will come in the exams. So you just follow the question. There are some answers you will not get from your study pack direct. Yes, but based on the scenario, you have to be open-minded. Yes, when trying to treat questions of this dimension, you open up your mind. Yes. So talking about efficiency targets, we look at the numbers of portions produced, or we look at cost per meal sold. Per meal, what is the cost of each meal? And do we have any wastage? Efficiency has to do with you using your resources in the best possible way that will minimize wastage but maximize output. So, and also, how do you use your staff? Do we have idle time? Do we have workers roaming about and they are being paid? Yes. So there should be value for everybody engaged in the canteen. Everybody should work for their money. Yes. So the staff utilization is also very important. The equipment too, how are we using them? Are we using them rightly? If we are to compute return on capital employed, are we going to get the best? Also, effectiveness, that is the numbers of students using the canteen will show our effectiveness. If the meal is nice, you see more people will come. That is as a result of customer satisfaction. Yes, effectiveness can be seen in the satisfaction those that patronize the canteen will get. And what is the nutritional value of the meal? Yes, it's not just coming to eat. Is it balanced? Is it nutritional? Yes. So you look at these are the aspects of effectiveness you look at in relation to just this simple question. So the main question I want us to actually look at is this question forwarded to the platform over time. Yes, it might look as if it's calculation is discussion, but there can be a calculation, yes, from all those discussion to test your understanding of those theoretical aspects. So this question is from the ACCA platform, yes, on this aspect of the syllabus, and I've decided to come share with us so that we know that yes, the first part of the syllabus, section 8, talking about financial management function and environment, is not all about discussion. It entails computation likewise. So that is why I've decided to come up with this question to broaden our understanding in the light of this. So can somebody read so we can solve without much delay? Yes, you can go through the one you have in case this is too tiny. You can read through the one you have on your WhatsApp page. Yes, nobody can read.
Okay, Ismailu is a town in Yangba East Kogi State with a population of 1 million people. The town council of Isanlu operates a bus service, Isanlu Bus Company or IBC, which links all parts of the town with the town center. The service is non-profit seeking and its mission statement is to provide efficient, reliable and affordable public transport to all the citizens of Isalu. Attempting to achieve this mission also involve operating services that will be considered uneconomic by private sector. Please go, thank you. By private sector bus companies due either to the small number of passengers traveling on some routes or the low fare charged. However, one member of the council has recently criticized the performance of Isalu bus service compared with those operated by private sector bus companies in other towns. She has produced the following information for the most recent financial year. Summarized income and expenditure account. Capital employed 2,210,000. Operating statistics for Iselu bus service. The total passenger carried is 2,400,000 passengers, and the total passengers mile travel is 4,320,000 passengers. Industry average ratio for the private sector bus companies. Return on capital employed 10%. Returns on sales, net margin 30%. Asset turnover 0.33 times. And the average cost for per passenger mile is 0.37 naira required. Using the information provided above, compare the performance of IBC to the industry average for private sector company. B. Discuss the validity of comparing the performance of the IBC with private sector bus companies. C. Explain the meaning of the following terms in the context of performance measurements and suggest a measure of each on appropriate to public sector bus. 1. Economy, effectiveness, and efficiency.
All right, thank you very much. Yes. Looking at this question, you discover you need your residual knowledge from ratio analysis. Now, the concept of studies is that you are building on the past of what you've known before. So in this aspect, I might not be taking ratio from the scratch. It is expected that you've known ratio and you know the formulas, even though I'll still show them a little. Yes, but it's expected that you should know ratio and the various formulas, which is very important. So some of those ratios, you don't need to cram them. By the time you keep writing them over and over again, they will be part of you. And in this course, there'll be a point you need to know formulas very well, especially when we come to issue of cost of capital. But there is no need for you to cram. Yes. By the time you keep solving and solving, yes. Though some people are very good at cramming, yes. But me, I discovered it does not. When I keep solving and solving, yes, my hand just get used to it. So I don't need to cram as much. Yes. Because I have too many things to read. So when preparing for the exam, so when I cram and I didn't get the understanding and the rudiment of the formula, so anything can happen in the hall. So I make sure I can write a formula 20 times. Yes, I have my plain sheets. I can write it 20 times over and over again just to get used to that formula. So as I'm writing, I'm getting used to it. That is the way I do my own. Yes, that is the way my maths teacher taught me to do it. So cram very well. Question: you need a knowledge. So it is a prerequisite or residual knowledge you past studies. This question. Looking at the question, we a transport yes, this is Isonlu, yes, hail from, and Kogi State. So it's a population of 1 million people, and it's just a forecast anyway. I just put that value. So the objective, what is the mission of Isonlu Bus Company? What is their mission? You must know that. I believe you've not just read like that, you read with deep understanding. Yes. So what is the mission? The mission of the Isonlu Bus Company is to do what? To provide efficient, reliable, and affordable public transport to all the citizens of Isonlu. You understand? To provide efficient, reliable, and affordable public transport to all citizens of Isonlu. Attempting to achieve this mission often involves operating services that will be considered uneconomic by private sector bus companies. So as IBC, which is the Isonlu Bus Company, as they try to provide these services, the private sector will see it as uneconomical, because to them they're trying to make profits, but to a small business company, they are not bus company, they are not trying to make profit, but to provide what efficient, reliable, and affordable public transport to its citizens. So we have a summarized income and expenditure of this bus company. Their passenger fare is staff wages 600 naira, fuel 300, depreciation 200. So these are the expenses incurred within this period. In total, they amount to what? 1,180. So the difference between the passenger's fare, this passenger's fare is what you're paying, which is the revenue, is 1,2. 1,2 minus the expenses, we have a positive value, which is what? Term as surplus. Since they are not out to make profits, the excess generated will be termed as what? As surplus. The capital employed is what? 2,210,000 naira. The operating statistics for a Sunlu bus service, total passengers carried 2,400,000 passengers. Total passengers miles traveled 4,320,000 passengers. So the industry average for private sector business companies, you can see now, they're giving us the average of the private sector, not for a not-for-profit making organization. So somebody will ask, is there any correlation between these two? One is not for profit, one is profit. So this is the industry average ratio. And now that of to that of the of Isanlu business company. Sorry, I have to switch to another laptop. I don't have light here. This will soon go off. So let me switch. So what they want us to do is to compute the ratios of Isanlu bus company and compare with the private sector bus company. So that is what they want us to do. That is what they want us to do. So now the first ratio we have to compute is what? The first ratio we have to compute is what? Return on capital. The first ratio we have to compute is return on capital employed. Return on capital employed. Sorry, just trying to switch. So the formula for return on capital employed is what? Please, you can write it down, please, as I.
Profit before income and tax.
Hello, hope you can hear me.
Yes.
Can you hear me?
Yes, we can hear you.
All right, yes, I have successfully switched now. So the formula for return on capital employed is what? Can anybody recall?
Profit before income and tax over opening capital employed.
Okay. Profit before opening capital employed. Okay, fine. Yes. So it can also be operating profits. Please, you can write return on capital employed. You can write calculation of ratios. Calculation of ratios. Okay, let me share my slide, please. Calculation of ratios. So calculation of ratios. Now, when you are solving ratios, there are guidelines to solve ratios. Now, some students, what they do when solving ratios, once they determine the result of the first ratio they are to compute, they will now write a story and compare. Now, the rule is this: just do the whole calculation of your ratios. Then you now have another heading where you interpret and explain what has transpired based on your results. Based on your results. So that is the approach to go about it. You solve your calculations. Also, in interpreting your results, there are certain things you must do. There are certain things that we must do to interpret our results. You must state the reasons why your result is as it is, and you must state maybe the advantages, disadvantages of that, and so on and so forth. So we'll see that very quickly now. Let's quickly see that. So calculation of ratios. Calculation of ratios. So the first ratio we'll look at based on what is given in the question. We have to compare. We have return on capital employed. Return on capital employed. And the formula is what? The formula I said is operating profit divided by capital employed multiplied by 100. Operating profits divided by capital employed multiplied by 100. You know, there are different definitions of all these things in various textbooks. So we have it as operating profits divided by capital employed. You accept my formula this way. I'm using this document from my Gmail, so I don't have time to use my formula tools. So operating profit divided by capital employed multiplied by 100. So from the question, the operating profit will be what?
$20.
From the question, the operating profit will be what? Someone
The
said 20.
surplus 20.
29.
Fine, 20. Now, if you want to solve, if you are using 20, what will be your capital employed? How will you write your capital employed?
2,210.
2,210.
Fine, good. Some students will still write 2,210,000. So if you want to write 2,210,000, you must add the 3 suspended zeros. Do you understand? to 20, then you can now use 2,210,000. But if you are using 20, you remove these 3 zeros here likewise to be 2,210. So most times, it's not that some students don't know what to do, but they juxtapose the values and use wrong values in a way they are not supposed to use it. So that is why sometimes we don't get the right results. So now to do this, we're going to use the whole value. We're going to use the whole value. It will be 20,000 divided by what? 2,210,000 multiplied by 100. So the result is what? You can use your calculator.
0.90.
Okay, 0.90. Okay, 0.90. That is 0.9%. 0.9%. That is for return on capital employed. The next ratio we have to compute is what? Return on sales. That is net margin. Net margin. That is net profit margin. We're going to compute net profit margin. We are computing these ratios because we are giving the industry average. So we compare our results with this industry average to know where IBC falls. So we have it to compute net profit margin. Now the formula for net profit margin is what?
Net profit over sales or revenue.
So,
100 over 1.
so in a question, sometimes you might not see net profit. Another word for it is what? Another word for it will be what? Another word for it will be what? Is operating profit. Do you get that?
Yes, sir.
Is operating profit. So I just want to use what we have here, what you've said. So the value, the net profit value is same as our operating profits. Please take note. So we have it as 20,000. The sales value is what?
So, please hold on. Return on,
1.2.
I have a question.
Please, write down, please.
The return on capital employed, I'm not getting 0.9% too. I'm getting 9.0%.
Okay, punch your calculator. 20 divided by 2,210,000. You have what?
20,000 divided by 2,210,000. I'm getting 9.0.
You can do it again. I just punched my calculator now. I'm having 0.90.
Okay, let's write down.
I just punched my calculator now. I'm getting 0.90.
Maybe my calculator is the problem then. Let's move on.
Try it again before we leave this point. You must get it. If the calculator is faulty, please on Monday go and get another one. So 20, what am I
You can say
writing?
times 100.
So the sales value is what? What will be the sales value? Looking at the question.
1.2.
Fine. So we have it as 1.2 multiplied by what? By 100. So the result is what?
1.67%.
1.67%. So, 1.67%. So this is for the net profit margin. So the asset turnover will be what now? 3. Asset turnover. The formula is what? Asset turnover. Our formula will be what? Assets. What is turnover?
1.2. That's the revenue.
Okay, fine. Turnover is revenue. That is what I want to get. Turnover is revenue or sales. So that is turnover. That is the word I want to get. So now from the question, the turnover is what?
1.2.
The sales. That is sales divided by what? Capital employed. We have it as 1.2 divided by what? The capital employed from the question is what?
2 million. 210.
It's clearly given 2,210,000.
54.2. 54.2. 54.2.
54.29.
54.30.
30.
You know, we are not multiplying by 100. Asset turnover is in what? It's calculated in what?
365 days.
It's calculated in time.
Yes.
0.54.
365.
It's 0.5.
1.
You are not multiplying by 365. This is not average collection period.
0.54.
Okay, fine. 0.54.
2.65.
So we have it as 0.54 times.
0.54.
Yes, times. If you check the average, you can see 0.33 times, right?
Times. Yes.
Yeah. So we define it in that line.
0.44 times.
So the next is which one now?
Average cost per passenger.
Yes, average cost per passenger.
So I'm not seeing the screen now.
Is it the only one that can't see the screen, please?
I can see it.
All right.
Can see the screen.
I can see it.
So you can log out and come in again.
Okay, sir.
So now the average cost per passenger miles average cost per passenger miles. How are we going to compute this? We are looking for average costs.
Total passenger over average over total passenger miles traveled.
Costs now. Costs.
Okay.
The cost.
Operating costs over passengers.
Very good. Very good. Operating costs divided by passengers miles. operating cost divided by passengers miles. That is the formula to get the average cost per passenger's mile. Operating costs. Operating costs divided by passengers miles. So now, from the question, the operating cost is what?
1,180,000.
Yes, 1,180,000. The passengers miles is what?
4,320,000.
1,320,000. So what would now be the average cost per miles?
0.27.
0.27. Okay. Is it just 0.27?
2731.
Yes.
In
I want to
naira.
get naira. I want to get that word naira.
Naira.
Yes. 0.27. So now, the next thing is for us to compare. Let's see the requirements. Using the information provided above, compare the performance of IBC to the industry average for private sector companies. So now, having determined this now, you can do a simple comparison, just like a table. You can have a table. Now, for the private sector, we can have private sector average. Now, IBC values. Now, the industry average, return on capital employed, which is ROES. The average is what for private sector? 10%. Now, IBC, our result is what? 0.9.
0.9.
Now, for the net profits, yes, return on sales. Return on sales. The average for private sector is what? 30%. IBC, our result is what?
Sorry.
The result is 1.7%. Or what do we have? Sorry.
1.67.
1.67. Okay. 1.67. Then the asset turnover.
Two 0.33 times.
0.33 times.
0.54 times.
0.54 times. And this last one, we have average cost per passenger mile. Per passenger mile. This we have what? In naira.
0.37.
0.37. And these we have what?
0.27.
0.27. So what will our discussion be? Comparing both values now. What will our discussion be? Comparing both values. Now, when you compare the performance of the private sector and IBC in terms of rows, what can you say? What will
Private
be
sector.
the interpretation? Yes, I'm with you. What will be the interpretation? When you
Based on
compare,
the industrial average,
yes,
private sector is performing better than IBC based on the return on capital employed. Private sector is having 10% against 0.9 of IBC.
okay, all right, okay, it's fine. So let me just because of time, let me do some little write-up on that. So we have performance comparison. You're right. Please, when you're answering question in the hall, always give good headings to your answers. Performance comparison. Performance comparison. I believe you know ratios are divided into various forms. We have profitability ratio, solvency ratio, investors ratio,
Efficiency.
yes, and the rest of it. Now, looking at these ratios we've computed, which rows and return on sales can be classified under which ratio?
Profitability.
Profitability ratio.
Very good. So performance comparison. Why am I saying performance comparison? Let's go to the question. Using the information provided above, compare the performance of IBC to industry average for private sector companies. That is why you see my heading, performance what? Comparison. So you always try to respond in line with the question. So ratios are divided into groups. So looking at profitability ratio. Now let's look at the profitability ratio now. Let me write profitability. Profitability ratio. You know, the question won't tell you, but you should know. Profitability ratio. Let me write small story. That's looking at the profitability IBC is not performing. Let me say it's not performing well. So it performed poorly. Anytime you are trying to compare, you always state the relationship between the two organizations. So it performed poorly compared to the industry average. Compared to the industry average of the private sector. So let the words flow as you write in the hall. So you now talk about the two ratios now. Rows. The rows is what? Rows is 0.9.
0.9.
Yes. Rows is 0.9% compared to what? Compared
10%.
to 10% of private sector. 10% of private sector. So what do you think are the reasons for these drawbacks? You must state that too. So let me write. As a public sector, you know, they are not out to make profit. As a public sector service provider, yes, as a public sector service provider, IBC provides service to less profitable routes. You know, since they are out to just satisfy the masses, even when there is one passenger in the bus, they will still go to the route because they are not out to make profits. So that is one thing. So as a public sector service provider, IBC provides service to less profitable routes. Yes. To less profitable routes. So, but if it's how to make profit, they won't do that. They won't do that. They won't do that. So also another disadvantage, another cause for this is that, let me say, they are also charging lower fares compared to private firms. Even having stated most of these drawbacks, you can still go ahead to talk about one advantage. You can state that IBC is not a profit making company. So you state its mission. Its mission
is to maximize profits.
Is to provide efficient, reliable, and what? Affordable is in the question. Affordable public transport. So this you can put down with regards to this profitability ratio. With regards to profitability ratio. So now the next is asset turnover. I might not put down anything regarding this. I'll just maybe make my expression. I'll just put the expressions in words, in verb. So when you look at the asset turnover, what is happening here? The asset turnover. So also, sorry, this return on sales, I didn't actually capture it. We are supposed to capture it likewise. Talking about Okay, let me see my statement. Okay, rows. Okay, captured. Then the net profits supposed to be captured too. The net profits for, okay, this is 30% and this is 1.67%. So we can also talk about that the net profit margin is 1.7 compared to 30% of the private sector. You can also look at that comparison, still under the profitability ratio. Then the looking at the asset turnover. The asset turnover. What can you say about the asset turnover? You can see the private sector is what? 0.33 times and IBC is 0.54 times. What can you say about that? Because yes, you want to say something? All right, let me just say what I have to say because of time, so that I won't get bored as much. So asset turnover, if you look at the breakdown, asset turnover is higher for IBC. So for the private sector, we can see it to be 0.33 times, but for IBC is what? 0.54 times. So why do you think this is happening? This suggests that IBC boss achieve higher utilization of their buses, irrespective of the number of passengers in a route. They don't mind. Even to the suburb, they will operate because all they are out for is to satisfy the masses. The masses. So there will be high utilization of the vehicles compared to the private sector. And that is why you can see the results in this light. So these suggest that IBC bus achieve higher utilization of their buses better than the private sector. Why? Because they charge low fares, and I would say they are able to cover more journey per day compared to the private sector. Yes, because the private sector will get to a point they will close for the day. But the public sector, because we want to satisfy the masses, we can go all lengths to ensure that we satisfy them. So that is the analysis for asset turnover. Now, for costs, average cost per passenger. Average cost per passenger. When you look at it now, who is spending more in terms of cost per passenger? Who is incurring more? The private sector.
Private sector.
They are incurring more because for one passenger, they are incurring 0.37. IBC is incurring 0.27. So cost per passenger mile is low. Is low. Cost now, we're talking about it is cost, which organization is on the advantageous side now. IBC is having an advantage because they are spending less on one passenger, while private sector is spending more on one passenger. So cost per passenger mile is low. Hence, it is positive because they cover more distance for lower cost. They cover more distance for lower cost. So this is high, on the other hand, for the private sector. It is high, on the other hand, for the private sector. So the IBC have more advantage than the private sector because they cover longer routes. They cover longer routes. Unlike the private sector who can just cover short distance routes, short distance points, but the IBC, their mission is to provide reliable service, so they can decide to go any length to provide service to the masses, So when you are comparing, you just look at the variables and look at the reasons for the results, the mission, and the rest of it. So that is the basis of comparison. And that is what the first part want us to do. Let's see the question again. Yes, using the information, compare the performance. So you have to compare the performance. Now, B, discuss the validity of comparing the performance of IBC with private sector bus companies. Who can explain this? We should discuss the validity of comparing the performance of the IBC with private sector companies. Any explanation to back up this? That is it valid? Is it justifiable to compare these two organizations?
To me, it's not justifiable because the private sector is out there to make profits, while the non-for-profit making IBC is there to just serve the people, not to make profits. So comparing both of them is not fair.
Yes, it is not fair. So there are several reasons why comparing the performance of IBC with the average ratios of the private sector is not a valid exercise. So there are several reasons. Now, first, the objective of IBC, as stated in its mission, are to provide efficient, reliable, and affordable public transport to the citizens of Isonlu. So the private sector companies are more likely to wish or to maximize shareholders' wealth. That is what they are out for. So this means that direct comparisons becomes less meaningful. Yes, because the calculation of return on capital and profit margin are not relevant for IBC. They are not relevant because where you don't, since you are not out to make profits, computing profits margin, computing return on capital employed is not relevant. That is profitability ratio is not relevant to them. And also the private sector bus company may select the profitable route. Yes, may decide to choose which route will give us more money. So that is the private sector. So they might not want to go to certain routes where they have less population. Yes, less population. So a public sector company such as IBC may provide less populated routes as part of its mission, may provide services to less populated routes as part of its mission. So these are some of the reasons why it is not justifiable comparing both, because their aim and objective are not the same. So comparing both is not palatable. So that is one thing you must note in relation to that option question 2 or requirement 2. As one thing we'll note with that. So the third question, that explain the meaning of the following terms in the context of performance measurement and suggest a measure of each appropriate to public sector bus service. So in terms of economy, what can you say? That we should explain the meaning, right? So you write what you understand by economy, then what can you say? Yes. So because of time, in terms of economy we said is acquiring inputs.
To minimize costs.
Yes, acquiring inputs at lowest possible cost while maintaining what? Quality. And what are those inputs related to this bus company? cost per liter of fuel, average staff wage compared to the market rate, procurement cost per bus. Do you understand? These are things you look at in terms of the economy. Those are the things you look at in terms of the economy. So in terms of effectiveness, we said what is the extent to which the organization achieves its targets or its objectives. So how do you measure effectiveness? You measure effectiveness by what? Passengers satisfaction survey, on time departure. Yes, how quick, how well do you keep to time? You can measure time that in terms of percentage. Also, you can measure effectiveness in terms of route availability, coverage of town areas. You can measure effectiveness. Your availability is also talking about effectiveness. So efficiency, we talk about efficiency by saying how well resources are converted into output. That is how well inputs are converted into output. How do you measure efficiency? You can measure efficiency by passengers carried per liter of fuel. Yes, that is when you put a liter of fuel, how can you measure that in relation to the passengers? Cost per passenger mile.
Per passenger mile.
Yes, cost per passenger mile. Revenue per bus kilometer. Per kilometer, how much income do you derive? So these are ways you can measure efficiency. So when you look at this, overall, you can just draw a conclusion that IBC performs poorly on normal profitability measures, but was better off on cost efficiency and asset use since it operates with a public service mission. So performance assessment should be emphasized in relation to value for money, not profit. That is in the light of IBC now. So you measuring economy, efficiency, and effectiveness will give a clear reflection of the success of IBC in relation to the service they render to the Isonlu community or citizens. So when you are served with a question in this form, you approach it in this light. So there is something that is very key, which I will just talk about briefly. There's what we call there are environmental issues, even in financial reporting. Those that will be writing FR, there are environmental issues that is being introduced into every aspect of our courses now. Environmental issues. There is what we call sustainability accounting, and it's been tested. It has been tested in PM. Yes, in a course, yes, in the past diet. Yes, but it's being spread across our syllabus now. So environmental issue is very key, is what we must take into cognizance. So an area of growing concern to all stakeholders, to all parties, all companies, is the issue of environmental, of environment, or it can be referred to as green issues. Green issues. You can browse about it to know more. So because you will not see these trending issues in most of our textbooks, so you can
Yes.
decide to learn more about it. So it is important that managers understand how the organization operates or how the organization operation affects the environment in order to satisfy public concerns. And there is need for managers to understand how the organization operates in order to avoid any penalties or costs that they will incur due to violating environmental regulations. So for these reasons now, environmental reporting is becoming a common issue that has to be part of financial reporting. So some organizations have adopted certain pattern Some organizations adopt triple bottom line approach. When you talk about triple bottom line approach, the key things you have to look at is people, planet, and profit. People, planet, and profit. Now, people represent the social factor. The planet represents the environmental factor, while the profit represents the economic factor. So this approach considers the effect of production decisions in terms of what? The environment and social values, as well as economic values. So as you operate in an environment as an organization, you must consider the people, the planet, and the profit you want to make. All these must be looked into. So this environmental issue is a recent issue that is being incorporated into every level of our exams that we have to know. So as we go ahead, we'll still be talking about the issue of sustainability accounting. Sustainability accounting. So hope we are fine with this solution, with this example that we've solved. Any question regarding this?
I want to add something.
All right.
I know asset turnover. When you have a higher asset turnover, it indicates that the company is doing well in terms of revenue. But in this case, IBC had a higher asset turnover, but yet in terms of revenue, the private sector is ahead. That also states that also shows that there's no basis of comparison for these two companies.
All right. Yes. So, thank you for that. Thank you for the addition. So, any other person that wants to say something? So, don't mind us. We are just talking about theory issues, and I'm trying to blend it with calculation so that to not look. So the next point on the syllabus that we have to consider, which will be tomorrow, is financial markets and institutions. Financial markets and institution. When we are done with this, we'll move to part B of the syllabus, which is working capital management. I believe you have some ideas where we'll look at current ratio, quick ratio, inventory turnover ratio, average collection period, average payable period, and the rest. If you don't have the syllabus, please try and get it. Or if I might send it to the platform so that everybody will have it. So that you follow it and do your own further readings. Yes. So that is our guide. So thank you very much for coming up online. See you tomorrow.
Thank
Sir.
you, sir.
Thank you,
Thank
sir.
you, sir. Thank you, sir.
Thank you, sir.